Hey folks, welcome to Wednesday, the 22nd of September 2021. Really quiet morning here on the markets. No real data coming out of Europe, and very quiet start to the US data slate. Really, the more interesting data coming in. Existing home sales at 3 o'clock today, set to come in 5.89 million, just below the prior 5.99 million. And then we're going to get the month-on-month growth expected at 2%. Well, actually, there is no guidance. We just have a prior figure of 2%. So, really, the big one for today is going to be well, then obviously we're going to have crude oil inventories at 3:30. Super Bowl each Wednesday for oil traders. But really, the big event today is the FOMC minutes and press conference this evening. So the minutes will be released at 7 p.m. On the dot, and we will be live in the Duggan Capital Discord for all the pro traders at that time, and then all the way through till 8 p.m. The speech will, of course, start as per usual at 7:30 from Jerome. There's a couple of traders looking at there being potential of sort of hawkish notes from Powell in this speech. I know when we got disappointed with really nothing coming out of Jerome at the Jackson Hole meeting, that people were really kind of at that time already kind of looking forward to this meeting instead of anything coming out of Jackson Hole. I think we probably could have some more hawkish tones out of Jerome. Some interesting changes to come up in the statement, I think, which will be released at 7. And I am expecting quite a bit of volatility over this event this evening. I think even if there is no real material changes in policy or the spending plan, the current quantitative easing plan, expenditure levels, I think for the market itself, that is probably going to be quite a bullish sentiment if we get that. And I think if we do get that hawkish tone, I think essentially we are then going to make a little bit of a further move to the downside in these markets. It does make sense, listening to Bloomberg and some of the market commentators throughout the week, that essentially everyone's now after quad witching, which was last Friday, a lot of people are now protected with puts on their portfolios for the downside. So essentially there is that sort of higher put ratio. And of course, you did see that on that really high VIX reading that we got on Monday, which is quite dissipated by now, I would say. But really, let's take things one step at a time and look at the markets and see what we can see from what we've seen this morning and what we would be looking forward to. And really, I'll get straight into the Nasdaq here to kick things off. Well, actually, I'm going to leave with the SPOOs today. Because everyone's kind of commenting on this when they're talking about Goldman Sachs, like we need to go down 10% before we can start to make new highs, and a lot of different commentary coming out really. But where you can see now, we have traded back on Monday into the 100 EMA, and those dip buyers are making money right now. And that double top high from the 13th, 14th of July this year, really capping today's trade, 43.74.5. You got the 50 and the 20 EMA above here. I think if we do push on above, I can't really see this market going much further above the 50 or the 20. Notwithstanding an ultra dovish sentiment coming out of Jerome this evening. I don't think the markets are going to want to do a lot before we hear from Jerome. Further downside, really, you're going to be looking at support 42.19.5, the high of the 10th of May this year, which marked the low there on the 19th of July on that pullback into the 50 area. So that was, really nice confluence of a couple of things happening at this junction in time here. So it should we fall down below, I think you are going to have support 42.19.5. Under a really sort of volatile continuation on the downside. I think we're largely protected by like the 200 EMA, 4117.5 down here. I don't see that trading this week, to be honest. I don't think Evergrande, as much as everybody wants to talk about the Evergrande situation and the contagion thereof, I just don't see that as being the big Lehman Brothers collapse that some people are quoting it to be honest. So I think, yeah, it's kind of washed itself out a little bit now as a story. So, how do we make money in these markets, Tim, today? Really, I think, if you're trying to nail a really big move on the SPOOs, I actually don't even know if today is the day for it. However, have bounced from the 100 EMA. I'm not really seeing anything very inspirational, to be honest, about trading this on the shorts or the longs. I think another retest on the 100 EMA. I think that's not going to be that well supported, to be honest, given the level of puts that have been taken now in this market. I think, a lot of the traders are just, a lot of really the bigger institutional traders are going to be happy to let this thing go down under the 100 EMA because they're going to be making money on their portfolios in that with the put protection. So, while, yeah, it may be support right now, I don't know under another questioning, is it going to hold? And I'd be looking at longs 42.19 and a half at that point. For the longs, really, I just can't figure it right now. I mean, I think, while we've seen the dip being bought, you have to be long this market. Essentially, the pullback was entirely finished this morning by really 1 a.m. and now we're kind of pushing on to try and make a new high. Essentially, well, a high in the 2 days. So really, I don't really fancy any longs in this area right now. Maybe, looking at pivot 43.51 and a quarter. But I think we're going to be supported in this gray area and trade across to the 50 EMA. And then, I really want to be neutral and see what this market wants to do at that point. So it's really not the most inspirational of markets to look at the moment. I think, yeah, look, if you break up above the 43.74 and a half, you're on a huge potential probability that we will then trade a lot higher into the 50. But I'd be one and done, and that's really, actually, if we just put this back up, this is really not the biggest trade you're ever going to do in your life, I don't think. You're stopping out here, maybe taking it on the R1 or above and up to there. Yeah, it's 5 to 1 on 30 ticks of risk. That trade, just there. But then, if you start looking to buy the 43.74 as well, maybe you're stopping out below R1. Suddenly this trade kind of just looks pretty much like a 2.8 to 1 with 44 ticks of risk. That's just not enough for me to get excited, to be honest. So, let's look around the rest of these markets here, like for the Nasdaq, for example. On the daily, it does, we don't really have a decent level that we came into to put on the floor here. 14.810s Monday's low. Yes, we've dipped and rebought to the 50 EMA, which is just at this point here. For me, yeah, I mean, it looks, again, this morning, those dips low in the APAC have been bought. It's just a formality now whether we trade the 15.117s, that 50 EMA. And I think, yeah, that's the condition that you have to be going with in this market. I wouldn't try to be kind of going against this right now. But it is elevated if you want to be on those longs. And the buyers have, essentially, looking at it in the mid right or mid left of your screen, the buyers have a lot of work to do here. We've got the 50 EMA, you got that 15.117 and a quarter level, which is sort of around this double high area on the 26th, 27th of July. Again, the high on the, what is this, the 13th, 16th, and 17th of August. The buyers have a lot of work to do here. I really do have a lot of work to do here. So, do you want to be trying to fix that problem with those buyers? I don't know. We had a very volatile situation yesterday over the open. If you can see here, basically the Nasdaq was just wiping between the 14,987s and the 50 EMA or the 15,117s level yesterday after the open. This being the opening candle yesterday, and just tight range up and down, and then finally giving it up on the reopen of electronic trade here. So it's tricky. You need to be fast. You need to be agile when you are taking profits on this thing and then trying to leave some runners on for extension of a move that you're on. It's very tricky until we get this speech tonight. The Dow kind of does move at a nicer pace, to a more palatable pace, I would say, than the Nasdaq. Lovely action came down to the low of the 19th of July this year on Monday, retest 33,502, and now we're bid up. It's really, I think, another formality that we trade the 100 EMA again today, with buyers having an all to do, because that really did mark the top yesterday on trade. Um, I think this market stands a good chance to get back up to R3. 33,919s is the floor for me. That is the high, of course, of the 16th of April this year. Provided a floor on the 30th of June and the 8th of July, when resistance kind of shook out and became support. Um, yeah, I think we are skewed to the upside, albeit I don't know how much more up we can get before the sellers are going to chow down on trying to drive this thing down to the 200 EMA. So again, really not easy markets to get on, these equities at this kind of junction in time. Oil, I think, is throwing up some much better opportunities on the day time frame, and potentially on the swing time frame. You see kind of this breakout here on the 13th of September, and really largely bought continuation up into the 73 handle, pull back almost to the tick low yesterday of the high of the 30th of August. And you can see that, lovely resistance yesterday at about 9 a.m. and down she went. Nice little trade there, actually, to be getting on, confluent with that 71.43 level. Risk reward wise, give it what, 20 ticks, 10 ticks, let's say 25 ticks there. Pushing it down to that level. It was about an 8.3 to 1. Not a nice little trade to be jumping on there. If I'll just kind of measure the amount of ticks we had, yeah, there was like 208 ticks to the bottom down to that level. So $2,080 per single contract traded on that short. Even it getting out on the prior day's lows, you'd be taking about 6.4 to 1. That's a nice trade. Whereas, you can see how tight the action is on equities between kind of different areas of interest. I'm actually going to remove this shaded area, which was a small gap on trade up until getting closed on Monday. So I still have my eyes fixed on a pullback to this trend. We may not get it. We may not get it, but the 100 EMA is kind of working its way slowly up to meet this trend. I think now that we're sort of breaking out from this area, this general trend area, down, I think, you could find some support at pivot, but I would much prefer like another retest 69.35s, or even deeper test to 68, say 10s, or 68 handle down here, and then you're on a high quality long. I don't like being on the shorts right now. I really don't. We had an API drawdown last night of about 6.1 million on an expectation of a draw of 2 mil. So you don't want to be selling oil in the face of that. We have DOE today, half three, set to come in, drawdown of 2 mil. I think if we have a confirmation of the APIs at a drawdown of like 6 million or deeper today, I think this market will stay sustained at these higher prices and further. I think we could be even looking at 73.70s by the end of the week. However, if you get DOE coming in line with expectations of 2 point whatever million drawdown, I think the market's just going to flop down, because what you're looking at is a market that has a 6 million drawdown priced in, right? So if it comes out at a 2 mil drawdown, well, that's sort of overly expensive by the tune of about 4 million barrels that was supposedly, or this market has an additional drawdown of 4 million barrels priced in. The difference between the expectation and the read across from API, right? So if you don't have that delta variance of a negative reading of, like, a differential of 4 million barrels drawdown, well, then I think this market does need to reprice. We will see ourselves trading down like, 68, like S2, or down to this area where I'm looking to get involved, uh, probably quite easily. You'll break down the lows that we saw yesterday. I was quite astonished to see that we didn't actually trade the 69.35s to the tick, and had to kind of chase that market a wee little bit there, around 3 and 4 o'clock, but that's fine, for the long. All right, looking at gold, I mean, gold, look, this, I would rather go to the dentist right now than trade gold. Honestly, I think that's the way it is. Gold is officially the worst trade of the year. I mean, yeah, it's not nice. I don't like trading gold this year at all. Um, yeah, but the risk premium, all right, fine. The risk premium definitely being built in over the last sort of week, I would say. We are making our way back up to the 50 EMA. I was looking at shorts in this area on Monday, and again yesterday at 10 a.m. We got back to test that area. Sorry about the noise in the background. I'll just let it pass. So yeah, we were looking at the short. Well, I was looking at the shorts Monday here against this mega trend. And sure, it sold off a wee bit. Then we came back again, Tuesday at 3 a.m. And then, a lot of those Asian traders love to trade gold between kind of 2 and 5 a.m. But, sure enough, 10 a.m. yesterday came up, and, it did not look weak at all, even when the dollar was sort of slackening off a little bit. So, sure enough, the short there, you had to abandon that idea. And often when you are abandoning a nice trade hypothesis, sometimes you fail to actually think to yourself, hold on a second, I should actually be going with this instead of looking for the short. I actually think I need to now, what is not happening is the short is definitely not valid anymore. Maybe I need to go with the longs. I didn't do that because I'm just not really trading that much gold this year. But of course, a nice little trade there, quite tight risk, I'd imagine. Yeah, that's like 10 to 1 of, well, let's give it 20 ticks of risk, right? 21 ticks of risk. You're getting on a 6 to 1 there to the target, 1781 spot 3. I do think that this market will trade back to the 50 EMA, 1795 spot 8 at the market today, right now. Yeah, there are trades there if you have the eyes for gold this year, definitely. But it's not as simple as risk on, risk off as it used to be, really, with gold, I have to say. You would see that move in the bond and the bid this week, say with the bonds or the T notes, and gold is just like sitting there doing nothing, and you're kind of questioning yourself as a trader. Euro dollar, we can talk about that a little bit later in the room live, but just to cover some fundamentals on it right now, the dollar, look, I think we're sitting here above these numerous excess highs, which I think is all quite telling, and telling me that I think, this dollar is sustained for a further move to the upside. Should we get that ultra hawkish commentary at the meeting this evening, for example, I think you could see the dollar price that into the upside. 93.44 is definitely to trade. It's only a small bit up from where we are now. It's just below the R2 on the day on the dollar, but I think you're definitely going to be getting up to more like 93.7. With that risk tone, hawkish commentary, bid up on the dollar. That's just kind of how I see it at the moment, and further downside then set in for the euro as depicted here. This is the euro. We have broken out on this mega uptrend from the lows back in sort of March 2020. Gives us this trend up, and so we're weak now below. I think we can easily extend down below this over the next kind of month, and kind of get really cheap on the euro. All right, so that is it for me for today's pre-US session. I'll be live in the Discord this evening at 6:45 p.m. all the way through to 8 p.m. We're going to have the statement at 7 p.m. on the dot. We're going to be trading these markets live at that time, and then we're going to settle down and get bedded in for the speech get the popcorn ready for Jerome at 7:30 this evening GMT. All right, if you haven't subscribed to the Duggan Capital Trading Discord, you can sign up. Just go to duggancapital.com and we'd be more than happy